Hi, this is Keith Shabbat, your friend in the mortgage business, and today we're discussing USDA seller concessions. One of the more attractive features of the USDA loan is the 6% seller paid concessions. When negotiating the purchase of any home, one of the most effective tools to reducing the closing cost of the home is using the USDA loan combined with the seller concession. The average home has a total cost of anywhere from 3% to 5% in third-party closing costs. These costs are addressed in the closing cost video. By using HUD's USDA guidelines, the average borrower can save thousands of dollars in buyer-paid costs by having a seller pay these typical closing fees. Be sure when negotiating your purchase contract that you ask for the closing costs concessions. Most lenders, including USDA HUD insured loans, will allow unlimited seller concessions. With conventional loans, lenders can place limits on home buyers' ability to ask for seller-paid closing costs. These limits can reduce the amount to 3% or can even completely strip your ability to get any seller concessions at all. If you don't have the funds to cover these costs, you'll most certainly want to have these fees paid for by the seller when possible. In a buyer's market, you'll always want to ask. The worst case scenario is your contract will be turned down completely. However, in the typical real estate transaction, a seller will simply counter your offer with what they are agreeable to. Your real estate agent can help you with these types of negotiations. Seller-paid concessions can pay the actual cost to close on your home purchase up to the percentage agreed to. These third-party fees can cover your prepaid items, which include homeowners insurance, property taxes through the end of the tax year, along with title insurance fees and your lender fees. Example: if you're purchasing a home for $100,000, your typical closing cost would break down similar to this. First off, with a USDA loan, you have a zero down payment. You have your funding fee that was discussed earlier in the funding fee video. That is going to be $2,000 on a $100,000 home. Your closing cost, let's figure those at 4% equal to $4,000. So your total cost to close would be $6,000. Now, by negotiating closing cost concession into your contract, you can reduce the amount of funds you need to close to zero. This is Keith Shabbat, your friend in the mortgage business. Thanks again.